let's get more on this now with Stephen Innes. He's the Chief Global Market Strategist at AxiCorp in Bangkok. Great to have you back with us, Stephen. Now, as we heard, there are billions of dollars worth of new stimulus measures announced for the UK economy. Have investors welcomed the announcement by Rishi Sunak?
I think they really have. Anytime we have governments covering main streets back, I think it's genuinely received positively by the markets. I think in this instance, however, it was pretty much telegraphed. But there was a small upside surprise, though, in that the Kickstarter scheme is uncapped, which is pretty good. We'll see how that goes through the duration of the unemployment cycle. I think we're dealing with a couple of other things right now. Summer trading mentality starting to set in, and this sees investors generally pull back from risk sentiment. And also, I'm just getting this feeling right now, investors don't know what to do with their money. I think they're fearing what's lying ahead in Q3, just like they underestimated the potential upticks in Q2. I think they're guarding against being too overly bullish going into Q3. They want to see what the data has in store, and I think this is why risk is a little bit reticent today.
Now, closer to where you are, Chinese stocks have continued to rally after that impressive surge we saw on Monday. So what's driving investor sentiment there right now?
It's amazing the power of the press in China. I think there's a move here to it's drawing parallels to the 2015 rally where China stocks rallied over 150%. I don't think we're going to get that type of momentum, but certainly the army of retail traders in China have come to the rescue here. I think the move here is attempt to deleverage some of the businesses in China, which will give them some more incentive to grow. And I think this is a good way, just like we saw Trump move towards America first. I think what China's trying to suggest here is China first. See that in the policy actions these days, where they're really trying to buttress domestic sentiment, not so worried about global sentiment, but directing money to the channels and to the folks that need it the most in China. I think that's going to continue to be the flavor of the day as we move away from that globalization towards more internalization policies out of China.
And hopefully we won't get a crash like we did at the end of that 2015 rally over in China. Can we look at Wall Street now? Because in the previous session, we saw stocks end in the red, ending a recent winning streak for US markets. Can you tell us what's driving in sentiment there?
It's interesting. There's really nothing that's changed in the overall narrative. We still have the naughty COVID headlines that continue to weigh on sentiment, but we were still rallying for the 5 or 6 days past. So it's a little bit confusing what's really driving. Again, I have to defer into this high level of uncertainty that investors have right now. Sure, the Wall Street continues to talk the markets down, but there's that wall of money that still sits on the bid every day, and I think that's neutralizing the negative effects. However, I think investors are starting to realize that we've got some trouble ahead in Q3. We've had that big pent-up bounce in the data. What lies ahead? That's the great unknown.
Okay, Stephen Innes from AxiCorp, a pleasure as always. Thank you.